Hi everybody, Tommy and Luke here from Dental Elite's finance team. We're going to run through a quick video today just to discuss some frequently asked questions that we get asked by our buyers from day to day. So Luke, what change have we seen in the market over the last 12 months?
Yeah, we've seen an abundance of changes. So there was a lender that actually enhanced their policy several months ago, obviously with their LTVs and interest rates. And I think since then, all the other lenders have been trying to keep up and sort of enhance their policies in line with that. What we've sort of seen is a bit of a deep dive to the bottom, actually, with the interest rate margins, where everyone's absolutely desperate to win business for new deals for buyers. And I think that's been really competitive then for everyone in the market, so that they can actually move forward and when buying a practice know that they're going to get the best LTV rates for goodwill and freehold, and also then the best interest rate margins as well.
Yeah, I think what we have seen is a lot of market positivity. Obviously, it's been well documented that the Bank of England base rate, the interest rates have started to reduce steadily over a period of time. And what you've seen in turn for that is many of the healthcare lenders, the tier one lenders, household names you'd be aware of, is they're enhancing their policy lending in dentistry specifically to make it a lot easier for buyers to buy their first practice and further so on. So I think what it means is that as a buyer, it's a really positive time to buy. 12 months or so ago, you were probably in a situation where if you wanted to place down a 10% deposit on the goodwill, you probably had one or two lenders potentially in the market, whereas now we're looking at 4 or 5 options there. So really positive time if you're a buyer looking to buy, and that is supported by all the bank policy at the moment as well.
Definitely. And I think one of the good thing to obviously mention as well off the back of LTV is where we say about one lender, 1 in 90%, there is actually a lender now that is actually willing to go even in certain circumstances up to 100% loan to value now for goodwill and freehold. Obviously, you know, it's never always guaranteed. It's got to be a strong enough case, but that's what we're here to do, to make that case as strong as possible. But obviously that's another great thing for first time buyers, is that now you may not even have to put actually any cash into a deal to actually get it moving forward, which is great news.
Yeah, and obviously indirectly that affects sellers of practice as well, you know, because there's some confidence there in the market with buyers looking to buy in. So it's certainly indirectly a positive for sellers of practice as well.
So I think another key question that we always get asked from our clients when they come to us is what exactly is needed from them for us to be able to assess financial viability. And I think obviously, you know, normally people have in their heads that they're going to need a plethora, an abundance of things that they've got to provide as bank statements, tax returns, etc. We actually don't need any of that up front, do we? So I'll let you take this obviously a bit more on what we actually look for moving forward.
Yeah, I mean, the real early stage is just a simple conversation over the phone with the buyer. Obviously, the assets that you hold as an individual, as a group, partnership, whatever it may be, will determine the funding options available to you. But a lot of it is about understanding the individual, their experience, because that will obviously then impact the funding option available. But part of that phone call is trying to understand the assets you hold in the background. So we will look at your current level of income against your expenditure. That's obviously going to be important when we get to a stage where we're assessing a practice financial viability. Just need to understand the level of drawings that you require into your household. And then we're also going to look at the cash you've got available for deposit, any assets you have in the background, you know, a residential property, buy-to-lets, or any kind of investments you've got. So they're the main things that we will look at as a whole. Is there anything you have?
Yeah, I think the beauty of all of that information is it's just within one easy to fill in form really that we send over to you. So it's not a case that we're going to be asking you to send us, you know, all of these documents that we need straight away. It's just one simple document that gives us an overview of your asset profile. And from there, then we can work on that for our financial analysis work. The banks obviously will need that down the line as well. And it just keeps it really plain and simple for you to start with.
One other question that we get asked fairly commonly is, how will I know if the opportunity is a financially viable option for me? So Luke, what process do we go through just to make sure financially it's going to be a good option to the client?
Yeah, so ultimately, obviously, after we've had an initial touch-base conversation with you, just to get a bit of background information, what we'll typically look to do is, once you've located a target practice of interest, what we will then do is we will go through and do a thorough analysis on the latest 3 years accounts of that practice. So we'll be having a real deep dive into the accounts to make sure that there aren't any discrepancies, red flags, just to make sure that everything looks above board to start with. From there then, obviously, after we've done that analysis over the 3 years, we'll be really looking at the net profit of the practice at year end, looking at the EBITDA adjustments that we can make that are bank approved and in line with the banks, not just following the sales particulars, which sometimes are a bit more lenient than what the banks would look for. And from there, then we're going to then look at your loan interest, loan repayments, and your tax. But what we will be doing with the loan repayments, as you'll know as well as I do, is we'll be stressing them at a much higher interest rate margin, because that's what the lenders will do. Providing that we can evidence on that worst case scenario analysis, it's still practice viable for you. At that point, then you can be confident that when we've looked at it, we send it over to the lenders, they're also going to have a look at it. Everyone is happy then that they can move forward. There is going to be some profit left.
Yeah, and although that might seem like a fairly complicated process, it's fairly day-to-day in terms of the outcome of that process is to give you an idea of how much money is going to be available in the business for me to take your wage, for taking on the responsibility of owning the practice, whether or not you're working in the practice, and obviously to pay down the debt that you're proposing to take on. So our job is to make it as straightforward and as simple as possible to understand if the practice is going to work financially. You as the buyer, you get the fun part, going out viewing the practice, the exciting part, and we work in the background just to make sure that financially it's a good opportunity for you.
So following us covering just a few of the questions or most commonly asked questions that we get from our clients, we hope that that's helped a little bit, obviously to preempt what you may be thinking before you come to us. But by all means, so that we can discuss in further detail, please get in touch with the details below.